The United States Treasury is preparing for something it hasn't done in 80 years. Not a reform, not a policy shift, an ending. On March 14, 2025, the Federal Reserve opened what it calls a temporary liquidity bridge between the dollar and a basket of digital settlement instruments. The announcement was buried in a technical memo. The financial press called it a modernization effort. But the language in that memo is not the language of modernization. It is the language of transition. The dollar is not collapsing. It is being replaced, and the replacement has already been built. Most people think currency crises happen suddenly, a panic, a run on the banks, a government that loses control. But that is not how reserve currencies die. Reserve currencies die through coordination. They die through agreements made in rooms you will never enter, under frameworks you were never told existed. And when the switch is flipped, it is already too late to protect yourself. The bridge just opened. The timeline is no longer theoretical. Right now, everyone is watching inflation. They are watching interest rates. They are watching the debt ceiling and congressional theatrics and whether the Fed will pivot or hold. And all of that matters, but it is not the story. The story is what is happening in Basel, in Singapore, in the closed-door sessions of the Bank for International Settlements. While the public watches the right hand, the left hand is building the infrastructure to settle international trade without the dollar. This is not conspiracy. This is documentation. In November 2024, the BIS published its final framework for the Unified Ledger. It is a cross-border settlement system that allows central banks to transact directly, instantly, without correspondent banks, and without reserve currencies. The document is 372 pages long. It describes how tokenized deposits and central bank digital currencies will interoperate on a shared global platform. It describes how legacy currencies, including the dollar, will be bridged into the new system during a transition period. That transition period has begun. The bridge that opened in March is not a bridge to the future. It is a bridge away from the present. It allows foreign central banks to convert dollar reserves into the new system without triggering a panic. It allows corporations to shift supply chain payments into digital settlement rails without headlines. It allows the system to be drained in an orderly way. And orderly is the key word, because the dollar is not being destroyed. It is being retired. This has happened before. In 1944, representatives from 44 nations gathered in Bretton Woods, New Hampshire. The world was still at war, but the question on the table was not how to win. It was what comes after. The British pound had been the world's reserve currency for more than a century, but Britain was broke. Its empire was collapsing. Its debts were unsustainable. The room knew the pound was finished. The question was not whether to replace it. The question was how to manage the transition without destroying the global economy. The answer was the Bretton Woods system. A new framework, a new reserve currency, a controlled demolition of the old order disguised as cooperation. The pound did not vanish overnight. It was slowly, legally, systematically drained of its role. By the time the public understood what had happened, the infrastructure had already moved. John Maynard Keynes, representing Britain at those talks, proposed an alternative. He wanted a neutral global currency issued by a supranational institution backed by commodities. He called it the Bancor. The Americans rejected it, not because it was a bad idea, but because they had the leverage to install the dollar instead. Today, the Bancor is being built. It is just not called the Bancor. The system described in the BIS Unified Ledger is Keynes' vision, 80 years delayed, a multilateral currency issued by central banks collectively, backed by a basket of assets and commodities, governed by an international body that no single nation controls. The dollar is being replaced by the very system it once prevented. And just like in 1944, the public will not be consulted. They will be informed after the fact. Here's what most people do not understand about reserve currencies. They are not chosen by markets. They are chosen by treaties. The dollar became the global reserve because of agreements. The petrodollar system, established in 1974, required oil-producing nations to price crude in dollars and recycle those revenues into U.S. treasuries. That was not a market outcome. That was a negotiated structure. It gave the United States the ability to print currency and export inflation. It gave the world a reason to hold dollars. That system is ending, not because of rebellion, because of obsolescence. In June 2024, Saudi Arabia quietly announced it would accept payment for oil in currencies other than the dollar. The announcement lasted one news cycle, but the implications are structural. The petrodollar system was never formalized in a single document. It was a web of agreements, incentives, and dependencies. When one thread is cut, the rest do not snap immediately. They fray. Now consider what's replacing it. The M-Bridge project, launched by the central banks of China, Thailand, the UAE, and Hong Kong, is a live platform. It has processed more than $22 billion in cross-border transactions using tokenized central bank currencies. It does not use SWIFT. It does not use the dollar. It settles in seconds with no intermediaries. It is faster, cheaper, and outside U.S. jurisdiction. The platform went live in October 2024. By February 2025, 15 additional central banks had joined as observers. The Federal Reserve is not one of them. This is not a rival system. It is the replacement system, and it is already operational. The unified ledger that the BIS published is the technical standard that allows M-Bridge and other regional platforms to connect. It is the protocol layer, the rails beneath the rails. Once it is adopted, central banks will no longer need to hold dollars to facilitate trade. They will hold tokens issued by the network itself, and the legal structure is already in place. The BIS operates under the Hague Agreement of 1930, which grants it sovereign immunity in every member nation. It cannot be sued. It cannot be audited by any single government. It is the only institution on Earth with the legal authority to manage a global currency transition without interference. The bridge that opened in March is the Fed's acknowledgement that it cannot stop this. The bridge is capitulation disguised as cooperation. Let us talk about numbers. The United States holds $33 trillion in debt. 78% of that debt is financed by selling treasury bonds to foreign governments and institutions. Those buyers hold treasuries because they need dollars to participate in global trade. If they no longer need dollars, they no longer need treasuries. Right now, foreign central banks hold approximately $7 trillion in U.S. Treasury securities. That is the foundation of dollar demand. Remove that demand, and the entire structure inverts. Here's the math. If foreign central banks reduce their treasury holdings by just 10% per year, that is $700 billion per year in selling pressure. The U.S. government is already running a $2 trillion deficit. It needs buyers for those bonds. If foreign demand drops, domestic demand must absorb the difference. But domestic buyers are not infinite. The Fed can step in and print money to buy the bonds itself, but that accelerates inflation. The choice becomes default or devalue. Neither option preserves the dollar status. Now add this. The M-Bridge platform settles transactions in under 3 seconds. SWIFT, the dollar-based messaging system, takes 3 to 5 business days. The cost to settle a cross-border payment on M-Bridge is 94% lower than traditional correspondent banking. Speed and cost are not minor advantages. They are existential ones. Corporations do not operate on loyalty. They operate on efficiency. Once the new system is faster and cheaper, adoption is not a choice. It is a requirement. The question is not whether foreign entities will move away from the dollar. The question is how fast they will move once the rails are fully operational. And the rails are already carrying traffic. You might think gold. You might think real estate. You might think other currencies. But the transition is not happening in isolation. It is happening across all asset classes simultaneously. Gold is already being tokenized. In December 2024, the London Bullion Market Association announced a partnership with multiple central banks to create gold-backed settlement tokens. These are not gold ETFs. These are digital representations of physical gold held in vaults, used as collateral in the unified ledger system. Gold is not outside the system. It is being absorbed into the system. Real estate is denominated in currency. If the currency loses reserve status, property values in that currency become untethered. From global purchasing power, your house does not lose value. Your currency loses value. And your wealth, measured in that currency, declines regardless of the asset you hold. Other fiat currencies are not safe havens. The euro, the yen, the pound are all participants in the same transition. The system being built is from global purchasing power. Your house does not lose value. Your currency loses value. And your wealth, measured in that currency, declines regardless of the asset you hold. Other fiat currencies are not safe havens. The euro, the yen, the pound are all participants in the same transition. The system being built is not designed to replace the dollar with another national currency. It is designed to replace all national currencies with a multilateral instrument. The dollar is simply the first and largest to fall. Even cryptocurrency is not separate. The BIS Unified Ledger explicitly includes provisions for interoperability with private digital assets. But interoperability means regulation. It means integration. It means the system you thought was outside the system becomes part of the system. There is no exit that is not also an entrance. The only assets that remain outside this framework are those that are physical, unregistered, and non-digital. But those assets are not liquid, and liquidity is what people need in a transition. The system is not eliminating options, it is redefining what options mean. Here is what we know about timing. The BIS Unified Ledger Framework was finalized in November 2024. The bridge opened in March 2025. The mBridge platform has been operational since October 2024 and is adding new central banks every quarter. The Federal Reserve has not announced a central bank digital currency for domestic use, but it has quietly joined 3 international working groups on digital settlement infrastructure. That is not development. That is preparation. The typical adoption curve for new financial infrastructure is 18 to 36 months from pilot to operational scale. We are already 14 months into that curve. If current adoption rates hold, the mBridge network will process more than 10% of global trade settlements by the fourth quarter of 2025. That is the tipping point. Once 10% of global trade moves off dollar rails, the network effect reverses. Liquidity follows liquidity, and the remaining 90% begins to shift. By mid-2026, the system will no longer be emerging, it will be dominant. This is not prophecy, this is adoption math. The infrastructure exists, the participants are onboarding, the incentives are aligned. The only variable is time, and time is not on your side. The bridge is not permanent, it is a decompression chamber, a way to move assets from the old system to the new system without a crash. That decompression chambers are not open indefinitely. At some point, the door closes, and whatever is still inside the old system stays there. You are being given a window, not a warning, a window. I do not make predictions. I read documents. I track adoption. I watch what central banks do, not what they say. And what they are doing is unmistakable. The language in the BIS framework is not speculative. The transactions on mBridge are not theoretical. The bridge that opened in March is not symbolic. These are operational systems, live platforms, binding agreements. The dollar is not dying because of mismanagement. It is dying because something better, from the perspective of central banks, has been built. And once the infrastructure is in place, the transition is not a policy decision. It is an inevitability. You will not see this on the evening news until it is too late to act on it. You will not hear about it from politicians, because politicians do not control this process. You will not get a notification from your bank, because your bank is being told what to do, not consulted. The information is available, but it is not being broadcasted. It is sitting in technical memos and international frameworks and central bank pilot programs. It is hidden in plain sight. That is why this channel exists, not to tell you what to think, but to show you what is happening while the cameras are pointed somewhere else. If you found this valuable, subscribe. Not because I need the numbers, but because the next part of this story is already unfolding, and most people will not know it happened until it is already over. The bridge is open. The question is not whether you believe this is happening. The question is whether you are going to cross it or wait on the side that is being decommissioned. I will see you in the next one.